I was saying, right, a lot of talks today have been about how fantastic growth we have made in the last decade or so on the back of the JAM Trinity. I'm totally with all of that accolades, but is it a time to get complacent? Is it a time to just keep patting our backs and not look at what needs to be done forward? So my talk, or for that matter, I am going to play that devil's advocate and probably invite all of us to look at what else that can be done to move forward on our agenda of financial inclusion for the masses, right? And for that, I'm going to ask you this question once again, which our MC has been asking again and again. Are you listening to your data, and are we moving towards a journey towards financial health, right, or the financial well-being? Now, let's start with some numbers, right? According to the RBI report published in 2022, September, in the state of Maharashtra, there are 47% rural population who's below the poverty line, okay? And the number at the India level is not doing that great as well. 42% of the rural population in pan-India is below the poverty line. And that makes me think that financial exclusion, for that matter, continues to be the greatest among the underserved categories of population in our country, which comprises of the poor, primarily the women, or the small holding farmers, or medium and small enterprise businesses, right? And it continues to hamper their way of living. It continues to hamper how much can they earn, how much can they save for their future generations, and how much can they protect themselves when there are calamities like COVID, right? And that's where I think this question becomes a lot more important, that with these numbers in mind, what are we doing to move forward? And let's look at some of the global numbers here, right? This is based on the Global Findex data from World Bank, right? From 2011 to 2017, from 51% to 76% people, 15 plus age group, have gotten a bank account, right? I think that's a very big number. That's a good number, something to really applaud. And if you look at the India numbers closer home, you would notice that from 2014 to 2017, we have almost hit an 80% bank account coverage, which also Amol was showing in his keynote presentation today, right? 2021 also pretty much a nearby number, right? But the reality, right? I think in the first panel discussion that we had today on the government ways, we heard from Mr. Samir Verma on how there are still inactive accounts, right? The JAM Trinity got us to this level where we have 80% bank accounts for our population, but look at the number of inactive accounts, right? He mentioned 8%. I'm going to go back and check my data. It's from the Global Bank Findex data, which says that approximately 27% of the accounts for age group 15 plus are inactive, right? That means the population might have access to the account, but they do not know how to use that account effectively for doing any of the financial activities. And the next data set that you see again is saying the same story, right? That when it comes to doing any sort of borrowing, or when it comes to doing any sort of saving or any other financial activity on those accounts, the number of people that were doing, or the number of bank accounts where this is actually happening, is very, very low. You can see the numbers for yourself. It's somewhere close to 20%, right? Now, we are talking about 80% bank account access, but we are at 20% of usage of those financial accounts in an interesting way. And that brings me to the point that financial inclusion is not equal to financial health, right? I'm going to say this again because this is so impactful, right? It gives me goosebumps, and I'm sure it's making you think as well, that financial inclusion is not equal to financial health, right? Now, let's take a moment to define financial health, right? Financial health says that an individual or a family is financially healthy when they are able to manage their day-to-day finances effectively, when they are able to protect themselves in the event of any calamity like a COVID, and when they are able to grow their wealth such that they can pass it on to their future generations, right? So that's the idea of financial health. But alas, I think the fact that we are still in the era of thinking about financial inclusion a lot more, we are thinking about access a lot more, we are failing to sort of think about the health of the individuals in our country, right? It's very similar to saying, I have access to the gym, is it going to guarantee me fitness? Not at all, right? Having access to the gym doesn't guarantee you fitness. So therefore, I will say this again, that having access to bank accounts or financial inclusion alone is not going to guarantee that you have financial health in our country, right? And that brings us to yet another important question, that what role will technology play in that space? Right? And that's where I present you 4 levers that I believe technology is going to help us drive such that we can move from financial inclusion towards financial health, right? The first one is measure what matters, right? Now, this one is a very interesting one, and I think I should spend some time on this one. Is your data allowing you to understand what are your top customer needs and challenges, right? Now, let me take an example here. For most of our rural population, the biggest challenge or the deterrent that they have is the distance between the financial entity and the place where they live, right? It probably takes them hours' journey to reach to the nearest financial institute. Now, if that's a deterrent, is that signal bubbling up in your data? Is that signal informing your decision? How are you going to devise your new products? Is it influencing how your new product strategy for your rural and semi-urban segment is going to look like, right? That's one simple data point, right? Now, that's where I think the traditional metrics, we saw the example, account opening, access to account is a traditional metric, but effective usage of that account, what is the activity rate on that account, is a lot more holistic metric, which is not just access-based, but it's usage-based, it's quality-based, right? So my invitation to all of us is to start thinking of metrics that not only talk about the access, but also that talk about the quality of the access and how that usage is for our customers, right? I was looking at the annual report of one of the leading Indian banks, I'm not going to name them, who are pretty much, upbeat about their initiatives for opening and creating products for the rural and semi-urban population. And I was looking at the metrics, the metrics that they are tracking for the success of it, and it goes like this. The number of districts served, the number of branches opened, the number of loans sanctioned, the number of accounts opened. Now, I'm not going to say that they are bad metrics. They are not, right? But they are shallow metrics. They are not giving the clear picture on how those products are being used, right? And that's where I'm going to show you some sample metrics as we go on. My invitation, as I said earlier, is to think beyond these normal traditional metrics and look at how can I devise better products with the help of the signals that my data is telling me, right? So these are some of the example metrics that I wanted to call out. How are the products that we are creating for that population help in increasing the income in that area, right? How is it helping in increasing the savings in that area? And mind you, all of this data is not just going to be financial data. I think in the morning we heard Mr. J.P. Gupta said that from an account access perspective, we are there. But for the credit, are we there? Probably not. He was himself questioning his own scheme of things. And that question is valid because for measuring all of these metrics that I'm showing you right now, just the financial data from the financial institute is not going to be enough. We will have to think about a lot of other variety of data that exist in our ecosystem, right? We will have to look at how some of the products that we are trying to operationalize in the rural areas or in the semi-urban areas are impacting the quality of life of the people who are living there, right? If my loan is getting sanctioned, what are the kind of activities for which my loan is getting sanctioned, right? And how those activities are helping in uplifting the economic status of that entire small region or unit, right? Now, if I want to triangulate this data, takes a lot more information and a lot more collaboration and partnerships and probably building of open digital networks, which we spoke in the morning for so long about, right? And from a social perspective, as I was saying earlier, how is it impacting the employment that's getting generated in that local area, right? How is it enabling the women to become more active participants in the financial decisions that are being taken in their families? Now, all of this data is not financial data. I'm hoping that all of you can already sort of see that, right? And that's where, as I said earlier, right, to get all of this data, to do all of this triangulation across variety of disparate data sources, you would need an open data ecosystem, right? Now, we already spoke about a lot of standards, and there are a lot of financial standards that exist for exchanging information, right? Data exchange. There is ISO 20022, and there are many, many more like that, right? For RTGS transfers or NEFT transfer, or for that matter, cross-border transfers, you have all of those standards that are available for exchanging transactional information, right? That's how we have been doing it. But what I'm talking primarily about is how are we going to make sure that we are able to do transfer and exchange of big data, right? And that's where I want to sort of draw your attention to the last point on the slide, which is privacy preserving record linkage. Now, what that really means is, if there are two data custodians, right? One could be a financial entity and the other one could be some sort of a regional retail entity. How do you take the data from these two entities and combine them in a probabilistic manner without compromising the privacy of the individuals, right? So in highly regulated spaces like medicine and life sciences, this particular technique is already pretty popular. And as Thoughtworks, I can tell you, we have done this for some of our clients. But I propose that for the financial industry as well, thinking about privacy preserving record linkage to allow for joining data from multiple disparate entities is going to be a very, very critical measure going forward, right? And all of this on the back of open data. There's another aspect that's very, very important to consider here, which is what role is the state going to play in that, right? Now, for example, let's take a simple scenario in which there is a certain market in which, because of the lack of data, the credit scoring cannot be done, right? And because of that, probably a person is going to miss out on getting access to a loan, right? Now, in such a scenario, what are the other ways in which we can still measure the creditworthiness of this person, right? Can we look at the rate at which they are making their utility payments? Can we look at the way they are paying their home rent bills? Can we look at some other data signals that can be used to take a decision on their creditworthiness and actually make sure that they are accessing the finance in a responsible fashion, right? Now, with that, there's another important consideration, which is the role of the state, as I was mentioning earlier, wherein can the state, in which case, in our case, the country or at the state level, can they make this data available in open and privacy protected fashion such that institutions, financial institutions, or for that matter, any other industry can use these data points to make some of these decisions, right? And with that, I would like to quote the initiative that has been taken by the Telangana government. I think under their Telangana AI mission, they have made a lot of data available from their state departments open for the public in a discoverable fashion, right? Such that anybody can discover those data sets and use them for building their own products or create value-added services on top, right? So my last point on open data ecosystem is that the future of data is going to be about building data sharing protocols. It's going to be about interoperability. It's going to be about discovery and transparency, right? Transparency on what is the quality of this data set. Can I use this data set with full confidence that it's giving me the right information, right? So as long as all of these tenets of data ecosystem are upheld, I think moving towards open data ecosystem is a fantastic way to create more equitable, reasonable products for the masses. The next one is my favorite, which is responsible AI, right? Now, again, I'm a fan of taking examples, and the example here is, I'm sure in 2019, all of you must have seen the fiasco that was caused after DHH tweeted about how the Apple Card, which in partnership with Goldman Sachs, was giving a lower credit limit to women. Now, I can tell you that Apple claims that their algorithm was not using any gender-specific information. Yet, the limits that it was assigning to a similar looking male and female having the same sort of assets and financial transactions, the credit limit were widely different, right? The male, on the one hand, got a higher credit limit, and the females got a lower credit limit. Now, what actually happened here, or what could have happened here, is that the data on which the entire models were trained, right, they must have had that bias. And that's where I'm going to say that while we are thinking about using AI in financial services, while we are thinking about building statistical models which can take the decisions and go to entirely paperless, without human intervention processes, we have to be very careful that we establish the right controls in our automated pipelines, in our entire process, such that we take care of bias, right? And that's going to come down to how do you deploy models, right? How do you test your models? How do you make sure that your data that is being used to train the models is free from bias, right? So all of these aspects are extremely critical when we think about using any of these technologies into the financial ecosystem. And this is a very simple example of credit scoring that we developed for rural India. This wasn't done back in the day for Rang De. It's a small non-profit organization which provides microloans. And you can see that in order to build this simple statistical model, we use the borrower's occupation, their annual income, family size, location, and the historical data that this particular initiative itself was generating, and probably the weather data to identify whether to or not to grant a loan, right? These loans are very small sums, 5,000, 10,000, but let's understand the value of something like this, right? If a farmer who is in need of money to make sure that their harvest reaches the market in time, they need that money at that point of time, right? They cannot wait for 45 days to make sure that their loan is sanctioned, and then that's a point lost, that's an opportunity lost, that's denial of service in my mind, right? And in order to solve that problem, we built this system which helped in reducing the time from 45 days to a matter of a week, right? 10% reduction in the loan processing time. And this, in my opinion, is a very simple example of how technology can actually pave the rail from financial inclusion towards financial health. Last but not the least, I think in the last panel discussion as well, Pinak from Airtel said several times that personalization is going to be the key, right? If we are talking about different market segments, we are talking about different sensibilities, it's impossible to take one size that can fit all. It's not going to happen. So we have to understand what our customers need. We have to understand what is the challenge that they are facing and create products that meet their needs where they are, right? And last but not the least, I would like to really end with this beautiful view. I think I've taken this from a report from Bloom. And this particular slide or picture really resonated with me, right? And in order to really understand how to put together all the 4 levers that I spoke about together, this is a view that we have to take, right? We have India, which is divided into 4 categories. The India 1, which is probably English fluent and digital savvy people. Within that also, by the way, there is India Alpha, which is very, very low amount of people. Probably some of them are sitting already here, right, which reside in all the metros and fully westernized, and they have lots and lots of money and they understand how technology works. Then there is India 2, vernacular India. They do not understand English. They are less fluent in that. They are digitally less fluent. And then last but not the least, there is India 3, right, which is less educated. And you can see that we were talking about the divide between the rich and the poor. This slide is a true example of that. 1.126 million people producing 1.3 trillion of our GDP, right? These numbers, by the way, are dated, but you can already see the disparate wide gap between the India 1 and the India 3 demographics. And my last, before this ring bell throws me out of this room, is that putting together open data ecosystem, putting together the thought process of personalization, we need to think about what products matter for what segment of our country, right? We cannot take an approach of build one product and take it to all the masses, because that's not going to happen. With that, thank you so much, and hope you have a good event.